stick with oil now and bring in Scott Bauer, CEO of Prosper Trading Academy. Scott, thanks for being with us. Just first off, what do you make of OPEC's decision here to cut projections for global fuel consumption in Q1?
I think they actually should have taken it a step further and cut projections for Q2 and maybe even some of the second half of the year. Because even with, the vaccine projection, and it's great that it is here now, it's going to take at least 90 to 120 days. Unfortunately, more on the long end of that for things and people to even think about getting back to normal. So I think they should have taken it a step further because I don't see how just Q1 is going to stay at reduced consumption, if you will. I think that's going to extend much beyond that.
I want to get to some news that broke today regarding Exxon Mobil. The company says it plans to reduce the greenhouse gas emissions from its global upstream operations by 2025. And we know that Exxon Mobil has been criticized by shareholders for sort of not having an energy transition plan. So does this go far enough? Do you think it's enough to appease investors?
It's a start. I mean, they're still way behind the curve when compared to some of their, counterparts out there. At least it's a start, but, we'll have to see what they do because at this point, it seems like maybe it's just a little bit of lip service to appease their investors, but let's see what transforms with the new administration coming in and how Exxon really responds to this. I think that, the tail of this is really going to, we'll see probably in the next 12 to 18 months what the reaction really is. But at least we have a start to it.
I guess that's the way to look at it, right? You got to start someplace.
Exactly.
Also,
yes.
Your reaction to this tanker blast that we saw at an oil field in Saudi Arabia, it didn't seem to really impact oil production there or prices. But do you think that this is, a foreshadowing of more of the same to come in the coming weeks?
I think what it is a reminder that there's always that geopolitical risk. There's always that regional risk. Fortunately, we really haven't seen anything there for quite a while here, but it's a reminder that that's not going away anytime soon. Now, the impact that it had on the oil markets was minimal at most right now, but I think what it will do is heighten people's senses again, who maybe have gotten a little numb and maybe forgot about that risk. And if anything, probably add a little bit of tailwind to the oil market.
What are your expectations for oil in the first half of next year under a brand new administration? And we know President-elect Biden's feelings about energy and oil.
Yep.
What are your expectations?
At this point, I think my expectations are more upon the reopening and vaccines, which, again, I'll go back to the first part of our conversation here, is not happening next week. It's not happening a couple months from now. I almost am in the camp of that this is a buy the rumor, sell the news. It's great that we have this rally because people are optimistic about the reopening. But the bottom line is, I think as data starts rolling out and as the vaccine starts rolling out, we have to see people start to use public transportation again. We have to see people actually leave their homes or leave their remote offices, get in a car and get back to offices. To me, that's not going to happen in the first or second quarter. So I don't think this rally is sustainable in the near term. I really don't.
So then do you see crude, for instance, spending most of next year, bound range between sort of $40 and $45 a barrel?
Yeah, I really think where we are right now is the upper range. I would not be surprised at all to see it dip below 40 again. And I don't think that happens in the next couple of weeks. But I think as the vaccine starts to roll out and as we see that people have not yet, maybe had the wherewithal or just the confidence of getting back to work and using public transportation, that's where I think that the risk comes in, that we could see a downside move and probably just below 40. I don't think we go much further below there, but yeah, absolutely range bound, 40-ish on the lower end. And really right now, I think we could be at a top.
What do you like right now within the oil space if somebody is looking to diversify the portfolio heading into the new year and thinking about oil?
I do like some of the refiners. I do like some of the majors. Exxon today actually on this sell-off, I think can be a little bit of a good purchase here. I had personally been long Exxon and got out last week. Technically, it made a really nice run above its 200-day moving average. It's come back there today. I think that's a good spot to be in here. But, these stocks and Exxon and BP, stocks like that, don't look for any kind of quick pop. Look for a longer sustainable pop, maybe down into the third, fourth quarter of 2021.
All right, let's leave things on a positive note. What are one of the sort of tailwinds, do you think, for the oil
Yeah.
industry early next year?
Well, the Fed for sure, right? The Fed and most monetary policy that we're seeing around the world is going to continue to be accommodative. So that's really good. And that's really good because we probably continue to see a weaker dollar. That weaker dollar is good for the commodity space, especially oil. I think that can be the major tailwind, more so than a ramp up in demand, quite frankly.
And we're going to be hearing from the Fed midweek in their last meeting of the year. All right, Scott Bauer, CEO of Prosper Trading Academy. Good to see you.
You as well.